Hey, good afternoon, Mark. Thanks for joining us today. I really appreciate your time to start the week. There's a lot going on, so let's just jump into it. I pulled today, September has been misery for the biotech index. I show us for September down about 9.25%, the S&P down about 3.7%. For the year, I'm showing the index down about 13%, SPY up about 14%. We're still in the middle of this bear market. When's it going to end? What's going on?
Yeah, look, it's been a pretty rough sledding lately for the sector, actually. And just yesterday, the S&P Select Biotech Index, Jonathan, made it a all-time low for the year yesterday. And look, I mean, higher for longer interest rates are clearly on folks' minds. We're actually hearing from some of the trading desks that we do business with that there's some early tax law selling that's coming in here, and some of these names that are washed out. Obviously, the relative underperformance, as you mentioned, of biotech relative to the broad index is, it's at a record. Things are getting washed out. There are these short baskets that are exacerbating down moves. There's momentum shorts coming in. Basically, it's the perfect storm to try to pile on.
Right.
When we see this trading dynamic, though, Jonathan, you can see a snapback, and today, fortunately, there was some good news on the tape, and pretty good reversal to the upside based on some positive news.
Well, it's not all down. It's not all downside. Let's talk about today. We've got Immunovant, ticker IMVT. They had a really good day. I'm assuming some sort of clinical trial or some sort of reporting that was favorable. What went on there?
Yeah, so it was great to see, more than 100% up intraday move for Immunovant on release of clinical data, an early clinical data set for their FcRn program. This is a program that's been closely watched by the street because competitor argenx, a $28 billion market cap company, solely because of their FcRn drug, which is approved in multiple indications. It has multi-billion dollar peak sales potential. The launch is going great. It's looking fantastic. So Immunovant, the data they showed today showed that they could be as good or maybe better than argenx's drug, certainly in the ballpark. And that opens up all kinds of possibilities for M&A, strategic acquisitions. So the company benefited materially from this data set today.
Huh? Fantastic news amidst the bad stuff. Another one was Intercept, 80% premium, ICPT, the same kind of deal. It's good data.
This was an M&A deal, Jonathan. So a private Italian company, actually, unusual to see them acquiring anything, but they came in, not a typical buyer of pharma assets, but they came in and, took the company out at an 80% premium. The stock had been trading at, very depressed levels. They do have a drug approved for indication called, it's orphan indication called primary biliary cholangitis, PBC. There's a little controversy around the drug. Stock is actually, even with the takeout premium, John, it's down 96% from its all-time high stock price. It's been tough sledding for the company, but it's kind of a 2x current revenue takeout deal. A lot of folks are concerned about the competitive landscape at PBC because another company that we've talked about on a recent Doctors In call, CymaBay,
Yeah.
ticker CBAY. Just announced really good data for seladelpar. That's their PPAR targeted therapy for PBC as well. Their data set looks much better than that generated with Intercept's drug.
Gotcha. And
And
that's for
so,
liver function, right? A liver disease issue? Right.
yeah, so PBC is a cholestatic liver disease, and maybe just really briefly, physicians monitor alkaline phosphatase, which is a liver marker which tracks with sort of the outcomes of these patients. So think of it as like blood pressure for liver diseases, this alkaline phosphatase measure. And what physicians are trying to do is get patients within the normal range or within a certain limit above the normal range for alkaline phosphatase, because patients that are managed in that range have better outcomes, long-term liver outcomes. And so Intercept's drug gets some patients in the range. CymaBay's drug does it better, but also has the benefit of minimizing pruritus. And pruritus is a terrible itching side effect. And some of these pruritic patients, PBC patients, they can have, Jonathan, uncontrolled itching where they get to the point of self-harm. They itch themselves so violently, their liver is so uncomfortable to them that they can, get to that point. So CymaBay's profile looks better. That's why, actually, candidly, we're hearing a lot of folks were short Intercept, in anticipation of CymaBay's drug coming to market and potentially taking a disproportionate share of the market based on the superior profile. Those shorts were hurt today with that takeout.
Yeah, they were. But someone who did well is we spoke in the past about Crinetics with the ticker CRNX. This is a really neat story, actually, in terms of patient care, but also in terms of returns to investors. What was the good news with Crinetics?
Yeah, absolutely, Jonathan. So keeping in the theme of biotech creating value in a difficult macro environment, individual biotech companies, right? Not at the index level. So Crinetics, as you point out, it's an endocrine company, and they're developing a drug for acromegaly. And they had some really good data because they have an oral solution for managing acromegaly patients. So just really briefly, acromegaly. A lot of these patients have a benign pituitary tumor that releases growth hormone and sends their hormone levels out of balance. There's a lot of debilitating side effects associated with these elevated hormone levels, and a lot of it's expressed through insulin-like growth factor 1, which is highly elevated in these patients. And one of the goals to manage them is to get these IGF-1 levels again sort of into this normal range or close to a normal range. There are injectable therapies, Jonathan, available today that can achieve that goal, but the administration is quite burdensome. So these are very viscous injections that are that are very painful, large gauge needle, high volume viscous injection. It has to be done in one of the large muscles. The injection site pain and inflammation is debilitating, and this is a lifelong therapy too, right? We've heard commentary from some nurse practitioners and physicians that manage the patients and administer the injections, and they describe how terrible and it's not fun for anybody. And so Crinetics' drug is an oral once-a-day pill that ostensibly can control hormone levels to the same extent. So it's what we're hearing from the thought leaders that reviewed the data that Crinetics releases. It would be a home run. And the profile looked really good. So, really good news for patients, Jonathan.
Yeah, good news for patients and good news for investors. It seems to me like the theme we're talking about here is we're still in the middle of this bear market, but there's some mid-cap clinical stage companies that are delivering results, both to obviously patients and to investors. Does that make you feel on the good side, on the bad side? Where are your thoughts and feelings just as we get ready to enter the fourth quarter here about the space in general?
Yeah, look, we're getting constructive. Look, I mean, we all get that there's not going to be a sea that raises all boats where we have a high cost of capital environment. I think we all understand that. But within the sector, there are so many companies that are, I think, well positioned to create value regardless of what the terminal Fed funds rate is, regardless of some of these broader economic headwinds. All the stocks we mentioned today are up appreciably and have created value for shareholders and certainly for patients. I think there's a lot of companies that fit this mold, Jonathan, that are also going to continue to create value, but it's not going to be every company. So we really think an actively managed portfolio is really well positioned to capture some of this alpha. And in addition, these are companies that are releasing data. There's a host of others that are close to coming to data events or a commercial stage that we see as trading well below fair value. So, if we think about the overall portfolio opportunity at this time, I think it's a great time to get, exposure to, assets below fair value, because given where the index is traded, right? This is the third year in a row we're down double digits, Jonathan. This index has never been down 2 years in a row. This is the third year in a row, right? Last 2 years we're down 20%. It's down, low teens at the moment, even with the rally today on some of this good news we're talking about. So there's a lot of assets that are below value. I think it's an interesting time to selectively pick away.
Gotcha. Well, that's good news to hear. And we're less than a week away from the fourth quarter, if you can believe it. So time to rebalance. Like you said, there's some tax loss harvesting going on. Don't let that muddy your view of certain companies. And we'll keep our eyes open and get ready for what this fourth quarter can offer. Thanks, Mark, for joining us as always.
Always a pleasure. Thank you, Jonathan.
Have a great day. We'll talk to you later, everybody. Thank you.